Welcome, folks, to another This Week in Crypto. We've got a lot to go over today. It's been a mostly negative week, as we can see. And, after a good start to February, it's a bit of a shame that we've taken this dip. It's not a massive dip, but it's certainly a notable one after things began to look a little overly optimistic a week ago. We have now pulled back with Bitcoin just hanging on around 40K at this time. It took a pretty sizable dip just in the last 30 to 40 minutes or so before bouncing a little bit back. So it's looking volatile at the moment, obviously, with Friday stock markets opening and the continued correlation that Bitcoin is seeing with it. There's a reaction to that with crypto, and we'll go over the correlation shortly to see where things look there. As far as altcoin prices, as we can see, they have not been great, especially in the last 24 to 48 hours. There's been a pretty notable dip. But we're seeing some signs of panic, and we'll go over that. Panic, of course, if you guys have followed our videos in the past, is generally a good thing and something we look out for. So we'll just jump right into it. Don't forget to drop questions about halfway through. We'll open up a poll for you so you can vote on which assets to go over, and we will try to get through as much as we can. So we talked about prices moving down. Let's talk about that correlation that I just mentioned. So here's Bitcoin here in green, S&P here in pink, gold here in gold. And right now, we can see that everything was rocketing up right around the 10th. That's when Bitcoin started to pull back a little bit. It had a rebound on the 15th. And as of today, after the 17th and 16th weren't looking so great, it's continuing downward so far here on the 18th. That being said, look at gold, how it's really started to shoot up in price. It's near its 3-month, I should say, 6-month high right now, while the S&P has continued to move down along with Bitcoin. So the S&P was seeing a bit of an uptick while Bitcoin was staying kind of flat, but it really started to get close in correlation right around the new year. You can see that as the S&P was plummeting, Bitcoin followed. As the S&P bounced, Bitcoin bounced as well. Obviously not a perfect correlation, but much tighter than usual. We can look just at the last month and really see how prominent that correlation is. So you can see just how much it's fluctuating up and down. When you really look at the big dips and the big rises, they're staying pretty much in tandem right now. And overall, we have found that Bitcoin thrives best when it is working completely independently from the S&P and gold. No inverse correlation, no similar correlation, just absolutely, functioning on its own right now. And we definitely see that there's evidence that there's more retail traders coming into crypto, people who were coming in from the stock market and trading crypto. So it's no surprise to see this increased correlation. However, it will not last forever. It never does. We see phases where traders from other sectors with big money are coming into crypto and tighten up the correlation temporarily until something shakes their hands out, or they just become disinterested, or crypto just has a mind of its own for whatever reason. Right now, though, it doesn't, and we're waiting for that to change. This correlation is very evident right now, and until it locks on to, gold or something else, or just decides to kind of have a significant pump on its own without equities markets following, we have to have a bit of caution when it comes to how much price increase Bitcoin can have, at least based on evidence. There's anything that can happen. Things are always evolving and changing. So just keep this in mind. Moving on to some of the main metrics, I wanted to start right away with the funding rates right now because they're looking quite interesting. This is a whole lot of lines, and it might be a little hard to see right now, but if I highlight each one independently, take a look at the Binance funding rate. You can see that the horizontal line right here would be the 0 line when funding rate is neither positive or negative. And then when it goes negative like this, that tends to be the best opportunities to buy. We can see back here in late September when we were seeing similar funding rates, these essentially marked the price bottom. And notice how we've really seen consistent fluctuations between negative and flat funding rates ever since mid-January. So it's been about 5 weeks or so of this continued pattern of either negative funding rate or flat funding rate. And the price has mostly risen since this time. We can see that it did drop. Basically, it stayed up right here back in mid-January until we had this short, call it 3 to 4 day stretch where it was mostly flat again. Then we see this big plummet and the shorts resumed. After the shorts started becoming really prevalent again, prices rose. And now it's starting to get a little more even between flat and negative. And after today's dip, we are seeing more negative funding rates, which is a good thing. As long as people are shorting more so than usual, as we're seeing right now, it's a better time than average historically to buy in. Of course, this is just Binance, so we can also look at FTX here in red. Take off Binance because we covered it. FTX is showing that we are slightly negative. It isn't a huge significant negative funding rate, but it looks pretty much similar. Notice that there's a lot more noise here because we're looking at 1 hour intervals instead of Binance's 8, because Binance only updates 3 times a day, whereas FTX is once a day or 24 times a day, so every hour. And right now, just like Binance, we're back in negative range. It looks like just in the past hour, it did take up above even, so keep that in mind. People do seem to be looking at this dip as an opportunity, and as of the latest hour, there's evidence of that. We'll see what it looks like on DYDX as well. It looks like about the same situation. These two huge spikes are kind of dwarfing it. I'll even just zoom in to get rid of those massive spikes so it's a little more clear. So DYDX, yeah, right about even right now if you look at the very far right. And then finally BitMEX, which also updates once every 8 hours instead of 1. We're seeing it's still negative right now, which is a good thing. So we've got 2 exchanges that are negative and 2 exchanges that are about flat right now. Overall, when taking into account the average funding rate, we're slightly negative, which is good. It means that there's a little fear creeping in terms of people putting their money where their mouth is. And we'll get to where their mouth is too here in a moment, as far as social volume, weighted sentiment, things of that nature. Now we can also look at the Sandsheets model to see what this is showing. And the funding rates across the board are looking slightly negative. Bitcoin would be right here. It's pretty intuitive where if it's showing a yellow, that means it's neutral. If it's showing red, that's a positive funding rate and people are still a bit euphoric or greedy or expecting things to go up. And then green, vice versa, it means people are fearful, showing some FUD and expecting the price for that particular asset to keep going down. So Bitcoin, Bitcoin here in neutral is not really moving much in either direction. But notice how the overwhelming majority of these top 150 assets are in negative funding rate range. So overall, it looks as though the crowd is expecting altcoins to get hammered a lot more than Bitcoin. And they're really trying to ride down the wave of a lot of rises that happened during the mini rebound about 8 to 12 hours ago. There was a pretty big bounce, not big, but at least mid-sized. And people are now looking at that as kind of a flash in the pan and expecting things to go down. We can see these red boxes to prove it. These red boxes for each asset were 8 hours ago. And if the green bar is lower than the red box, that means people are shorting more significantly than they were just 8 hours ago. And I'm seeing, just by eyeballing, a pretty good chunk of them, maybe half, maybe a little more than half, it's hard to tell, are below where they were 8 hours ago. Now, definitely the majority are below 8 hours ago. Even the ones that were positive, we can see that the bars are below. So overall, just in the past 8 hours, if you're looking to do some swing trading, people are shorting more now than 8 hours ago. Generally a good thing for at least a short-term rise to get some of these shorts liquidated. So based on history, this would indicate that things will bounce in the short term, but it could also flush further, and you'd really start to see a lot of green here with shorting all the way across the board. That's what would happen if things just plummeted for the rest of Friday. All right, so that's funding rate. Let's go back and take a look at some of the social data. We'll mix things up and kind of go in a different order than usual, because I think that some social metrics right now are very important to check out. Here is a look at the daily weighted sentiment for just the past month. I'm going to zoom out and just take a look at the last 6 months to give us some added context. We can see that the weighted sentiment really peaked right around the respective all-time highs that were occurring around late October. And of course, this one was not as believed here in mid-November. Regardless, you still see plenty of euphoric spikes around it where people were talking about Bitcoin in a very positive light. We start to see Lambo, rocket emojis, all sorts of things around these huge tops typically. We even saw them in mini scale around the local tops that occurred about a week and a half ago. And those have slowly come down as the price has shown some resistance from going further up. And we're just a little above neutral right now. And ideally, we'd want to start seeing it drop into negative territory as we saw about a week ago, the 11th and the 14th. Notice how right around the times that they went negative, prices stopped moving down, especially right here. On the 14th, things actually popped right back up until people got positive and said, all right, that was the dip to buy. And as soon as they got confident, price goes back down again. So sitting at neutral, not much to say other than we need to wait until we see the next big move of where the crowd decides how they feel about future price movement. Perhaps going into the weekend, we'll see maybe a little bit of euphoria if prices start to bounce, or panic if prices continue to show a lot of volatility and pushes some weak hands out. On the social volume side, we can see that the trend is kind of continuing to stay flat. Let me put up a little smooth moving average here. We'll put social volume at 1 day, and we will put the indicator as a 30-day moving average. That is very bright, so I'll make it a little darker. That'll work. Make it lighter instead. So overall, social volume is pretty much treading water. It isn't really moving in much direction. However, if we look at social dominance, there is an evidential uptick in the percentage of discussions related to Bitcoin versus the top 100 assets. And this is a good thing. Overall, since late November, the trend is moving up finally. I'll put this also on 1 day, and I'll add a 30-day moving average. And we were at the end of November seeing about 11.8% of discussions related to Bitcoin. That has ticked up, and it's now up to about 17.5%. On a recent call, I talked about how 20% is a nice nice percentage, arbitrarily, of course, to look for as enough attention generally being given to Bitcoin compared to other altcoins. Generally, when the social dominance is above this line, see how right here, right at 20%, that's where we kind of saw a local bottom, and then prices were rising as it was staying above 20%. And then when it went below 20% here in late October, yes, there was one more leg up to an all-time high, but this was also around the time that whales were beginning to sell. A lot of our metrics were starting to look a little bearish. And sure enough, right after that all-time high, huge leg down. And the social dominance has stayed below this 20% line ever since. So by all means, social dominance being above 20% is not an end-all be-all metric to indicate that prices are suddenly going to rise, but overall, based on history, especially recent history, I've found it to be a nice sort of baseline to check out. Doesn't necessarily mean we're bearish right now because of it. That's where funding rate, circulation, daily active addresses, MVRV, all sorts of other things that we'll get to still factor in as well. But overall, for social metrics, I put this metric right up there with weighted sentiment as a very vital thing to keep in mind. So we touched on weighted sentiment, social dominance, social volume. We'll give the social metrics a break for now. We may touch on one or two more. Now let's take a look at MVRV because it's obviously been quite an interesting story. We got into positive range and very positive range about 10 days ago, and we were kind of fluctuating within that positive range up until the big correction that occurred yesterday. The 15% line, which I always try to mark when I show off MVRV, looks right about there. On the negative 15% line, it's right about there. And we can see that it never really got to that danger zone. And that's an important lesson because sometimes it just won't. That this line essentially means it's in a top 10% most corrective spot as far as just average trader returns, and it won't always get there. You know, it got close, but sometimes, you know, you just get close to the super danger zone, and then things will correct on its own without ever needing to get to an extreme. So generally, you can look at MVRV as a confidence measure where the closer it gets to either of these polar extremes, the more likely there's going to be either a correction or some sort of opportunity. So we saw a huge opportunity, of course, here, but it's only happened twice in the past 6 months going below this line. Overall, you know, getting above 10% like it was for most of the past week, that was a sign where taking some profit would have been justified for sure. And sure enough, after the correction, we went all the way back to even. And being back at even means anything can happen. I know that's not an easy thing to hear, and we'd all like to just see a very clear pattern going into the weekend. But as it stands now, average trader returns can teeter either way, with everything kind of neutralizing here on Bitcoin's end. Now, we, of course, can look beyond just Bitcoin.
Brian?
Yes.
What I want to say, as we say the title is oversold. According to this metric, it's not oversold. Yeah. So we can bring it down to, it can go lower. Yeah. Mm-hmm. But as we will see maybe from other metrics, it's also not so bad the area we are in. It's always, or quite often, many times we will have mixed set of settings, and I think today is the case. On MVRV, yeah, definitely we can go lower. We went lower many times in history. Yeah. Just wanted to say, yes, maybe some people joined for the title. Is the oversold? Are we oversold? Yeah. On this one, no, but on some others. Mm-hmm.
Yeah. Yeah, I think, you know, for the 30-day MVRV, for sure, it can go either way. And this is indicating that we are not oversold. We're simply right at the neutral point. I was also going to show the fact that we have a Sandsheets model that will blend all of those timeframes together. We've got 1 day, 7 day, 30-day, 90-day, 6 month, and 1 year MVRVs all blended together. And that paints a more positive picture for us because the 1 and 7 day divergences are showing bullish right now. So very short term is bullish. 96 month and 1 year, they're more on the flat side. We can see with Bitcoin, they actually have these little bars right here, which may or may not be able to be seen on your screens. They're all showing bullish divergences as well, just slightly. And that is what is causing this to show semi-underbought, or another way of looking at that would be semi-oversold. We can also see with altcoins, they're almost universally showing either semi-underbought or quite underbought right now. So from an MVRV perspective, looking at multiple MVRV ranges, Max, we're seeing that there is definitely some evidence that MVRV is looking more bullish than it is bearish. I can show the average funding rate right here, or average MVRV that is right here. And there's definite proof that after this dip, we are in a range that is below zero by a pretty substantial margin. Certainly not where it was right at the bottom on the 22nd through 24th, but it's certainly looking better than it has when you factor in those other time ranges. So that's certainly something to keep an eye on, guys. MVRV is pretty reflective of just how much euphoria or pain there is in the markets. And on 30-day, which is probably our favorite kind of mid-range MVRV, yes, it may be neutral, but very short-term and very long-term, definitely looking more bullish. We can also look at like the 1 year, just to take one example and put it on Sandbase. MVRV 365. So that's 365, just to give you some insight. We're looking at around negative 15% for the 1 year. Now, of course, we're not looking at the same plus 15 or negative 15% when it comes to 1 year. There are much larger fluctuations when you look at such a large time frame. So we can see like it got all the way up above 50%, for example, at the first all-time high in October, and then all the way up to about 47, 48% right before the true all-time high that occurred on November 10th. So it could very well, fall all the way below negative 30% before there's really an extreme zone that shows on the 1 year MVRV. But overall, that's just a little snapshot of how like a very long time frame MVRV would look. All right, let's go back to some on-chain metrics here. And Max, by all means, feel free to chime in on anything you're seeing or anything we've already talked about here.
Yeah, I will.
All right, circulation, guys. So right now, it has come back down a bit since the very start of February when things were starting to look really good. This was a nice sign that utility was picking up, at least temporarily. But very quickly, it started to drop back down. And especially when you see something like that with circulation and something like that with price, that's generally a bearish sign on the very short-term scale, at least, because there is less and less utility going on in terms of unique coins moving from address to address, and price is actually moving up. We'd rather see, price moving down and circulation moving up like we saw there. That's a much better scenario, which would indicate that there is an increased amount of utility and interest in moving tokens compared to what prices are doing. So overall, the long-term scale, if we look at our NVT model, we blend all of that together to show just how many unique tokens are moving compared to the current market cap. And it's actually painting a slightly bullish perspective. For a fifth straight month, in fact, we are getting more coins moving on the network than the market cap currently dictates. That would indicate that things can bounce, and we have seen evidence that when it gets into the semi-bullish range, prices can jump in a hurry. We just have to avoid these red stretches because that's where we start to see, this huge volatility and the big downswings. We saw more consistent downswings in the past here and here. So it's not always a perfect signal by any means, but overall, as long as it's staying in the yellow-green area or the bright green area, we're in a pretty good spot. And that's nice to see. Despite all of this noise going on, I can zoom out just a tiny bit here. I'll do like the full last year. And we can see for perspective, circulation a year ago, we were seeing maybe 153 to 160K Bitcoin moving per day. And now we're at 163K. However, a year ago, price was above 50K, sitting at around 52-ish or so. Now we're way down at 40, right? So we have just about the same amount of circulation as a year ago, but the price is, 20% lower than it was. So that's a good sign, and likely why we're seeing a slightly bullish divergence here. I'm curious on your thoughts on this, Max. What do you think about the sort of on-chain utility going on for circulation and, of course, daily active addresses when we get to it in a minute?
It's good, but I'm looking forward to see what we will get in Ethereum. And by the way, these big transactions, like what we call whale transactions, do we have it only for ERC20, or do we also have it for Bitcoin?
We definitely have it for Bitcoin.
Yeah.
We'll take a look at 100K or more here. And so this is how whale transactions are looking right now. It looks like they haven't really been too active.
Yeah, nothing special here. Okay.
And you brought up whales. We can look at whales in just a moment. While we're on the topic of utility and on-chain kind of activity, we'll take a look at daily active addresses here just to see if there's anything different going on. And it looks like the answer is not really. If we look at the moving average, it's, after this huge dip that happened in May, and then the rebound that occurred from mid-July all the way up until the all-time high, that's when things topped out. We saw a minor downswing in the overall amount of unique addresses interacting on the BTC network. And then around late January, that's when we started to see a bit of a turnaround. And since then, it's been a very slight climb. Now we're still nowhere near the pre-mid-May crash daily active address threshold. Generally, we look for like 1 million or more active addresses. Right now, we're looking at about 938,000 daily active addresses per day. So if we start to see bunches of like 1 million or more, like we reported on just about a week ago, that would be a nice sign that things are finally starting to pick up and more addresses are getting involved. Right now, we're not quite there yet, but at least having this slight uptick that's been going on since late January, that's a nice thing to see and something to keep an eye on. If we had, this version on the way we looked at circulation on the NVT model, if we had something like this similarly for daily active addresses, it would likely look somewhere between neutral to just slightly bullish. And that's kind of my perspective on how these addresses are looking and the overall on-chain utility is looking for Bitcoin right now. All right, so now let's take a look at whales. As promised, we'll just look at the gold line here. So what this is showing is the overall percentage of supply held by Bitcoin addresses holding anywhere between 100 to 10,000 coins in them. And we have seen since late October a pretty big long-term profit take, right? So we've gone from the whales holding about 49.5% of the overall supply, and that's dropped down to about 48.5. So give or take, just a little over 1% of Bitcoin supply has been shed by the largest tier of regularly active traders. The reason we don't look beyond 10,000 coins or above is because those are usually, at least a very high percentage of them, belonging to exchanges, and they are not very active or reactive to the markets. So we look at this tier for a reason, and that's because there's some very obvious alpha in what their behavior looks like and where Bitcoin's price goes next. So when we look at the big drops in their supply here, we notice a trend of prices very quickly afterwards falling off, and then vice versa. If we see something like that, look at how prices kind of flatten out, and then boom, there's a big uptick. Now we see plenty of anomalies. We see them taking profit here from early August to mid-September, but prices kind of move up or at least stay flat. But then eventually, if we see a very, very prolonged accumulation like we saw there, prices will absolutely move up. And we even see a bit of delay in their behavior compared to what prices do. For example, when they started taking profit here in late October, we did still see a leg up to a new all-time high a couple weeks later, but because these key stakeholders were not as involved in trading Bitcoin as the mid and small traders of Bitcoin, we saw a big plummet thereafter. And that's generally how we see things. Now, yes, Bitcoin has risen a bit since January 24th-ish, I believe was where the bottom is. But because whales are showing signs of taking profit, there's a bit of a concern because of the fact that they haven't really shown any serious signs of accumulation. They did a little bit here, but after the 12th, just about a week ago, they've started to move back down with their supply held. So overall, mildly to mid-sized bearish signal right here. We can take a look at just...
Good shot, Brian. Actually, I would say from the late stop, where you correctly pointed out it was early divergence, like they started to decrease holdings. We're still kind of in a downtrend channel. You could say it in this way. Yeah. We almost did like break out of it, and it was like a precursor for this latest small rally we had. You see this pink line? It started to increase, and then the price followed. Yeah, that happened. But they like indeed dumped immediately, and so the price catch up with it eventually.
Yeah.
So we kind of it looks like it's not sure, increase, not decrease, or increase, not increase. Yeah.
Yeah, the good news is it's a pretty tight range right now. There's not like any serious, huge upward accumulations or downward dumps. It's kind of staying in a tight range right now since February started. So, I like to look for like a huge wave up or huge wave down to kind of signify the trend of where whales are going to kind of continue behaving for a while. So it at least looks like things have gotten kind of polarized, and not all whales are thinking the same right now as they do for like a more long stretch of kind of the same movement. So as you were talking, Max, I switched to like an absolute value instead of percentage of supply. And we can see that at the top, they were holding about 9.32 million Bitcoin, and they've dropped down to 9.18. So we're talking about since late October, they've shed about 140,000 Bitcoin total. That in terms of real USD value, that would be, I think, in the hundreds of millions, maybe even the billions. So we're talking a ton of money there, guys. It got as low as 9.14. So at least since February 2nd, the past 2.5 weeks or so, they have accumulated about 40,000 Bitcoin again. So very short term, they're still up, but long term, they're still down. You mentioned Ethereum. We can look at Ethereum. We're about halfway through the call now. So Balresh, if you want to start putting that poll up and gather some suggestions for what we can look at, we would love to get your thoughts on some assets for the last 15, 20 minutes of the call, guys. Oh, one more thing I'd say for Bitcoin. Mean dollar invested age is an important one to look at for a sign of dormant coins beginning to start moving again, or that they're stopping the movement like they were back in April. Overall, not much change. We're continuing to see the average age in which invested Bitcoin stays in their same address. That average age is continuing to climb up right now, indicating that dormancy and stagnancy is starting to take hold of the markets again. That's generally not what we want to see. The last time we saw a really sustained long period of dormancy was right around this 3 month, 2.5 month huge downswing in May through July. Now we've already had a huge downswing that's occurred for quite a while. So, at least a lot of damage has already been done, but it appears as though people are starting to kind of sit on their hands a bit and not move those super dormant coins the way they were, in the early part of last year when things were really thriving. You can zoom out to like 5 years and you can really see a picture of just how much this line moving down matters. Going back to 2017, this was kind of the first big bull run that really caught a lot of traders' attention and got a lot of people into crypto, including myself and many people on Santiment's team. The average age back in early 2017 was just under 400 days, and it got all the way down to 65 days at the peak of the bull run. And then when it was at the peak, notice how this flat line started to emerge, indicating that dormancy was about to reverse. And sure enough, prices went through a long bear market thereafter. And as it did, prices began to rise. Then all of a sudden, right around here, 2019, big drop, prices are rising again. Flattens out here shortly after the top. Dormancy takes over, mini bear market once again. And then obviously the latest one that occurred in late 2020 all the way until mid 2021, that's our huge rally to pretty historic numbers, going from 62K, big upswing here. And then this one, it was a very small dip in mean dollar invested age. It was enough to get us an all-time high. But just like Whales and a few other metrics we looked at, this was kind of it was indicating that it was not a very confident rally to a new all-time high. So if you were watching mean dollar invested age and whale activity and some other things, it would have been a sign that this wouldn't, compared to 2018 all the way to mid 2020, there was very little whale activity, and then huge activity that occurred right near the top when things got, I believe it just squeaked above 4,000 here in May before dropping off. And whale activity is down relative to where it was in May, but it's still up pretty massively compared to where it was from mid 18 to mid 2020. And right now we're seeing about, if I have this on daily, let me switch to, okay, it's on weekly because we're looking at very long. That's fine. So in the past week, we saw about 43,000, 44,000 whale transactions, and it peaked up at looks like 160,000, which was massive. If you go back all the way to the top of Ethereum in January 2018, we saw 279,000 whale transactions that week. So generally, this can be, at least the way I see it, Max, the whale transaction count, it can be used as both a huge top or huge bottom indicator, indicating that a lot of whales are either stepping in or stepping out, depending on what price direction is prominent at that time. What are you seeing here?
Yeah, same. It's similar to a few other indicators. We need spikes to see potential reversal, strong spikes. We had some at the latest bottom,
Yeah, very minor one here on the 24th, and that actually was the bottom. So that's significant to see. And then we saw, of course, really the two biggest spikes we've seen. I guess we can include that one too. Yeah, all three of them. So if we say, here, I'll mark them with a unicorn. That's perfect. Spike there.
The poll is up, by the way. Voting can.
Perfect. One there. I've been waiting very long for the opportunity to use our unicorn emojis, guys. So 1, 2, and 3. These were the top, and bottom indicators, because the price was moving upwards when this spike happened, upwards when this spike happened, and then downwards when this spike happened. And all three of those, the price immediately reversed and moved in the opposite direction. So sort of like social dominance, if you're looking at like a smaller altcoin, when you see big spikes, that usually means the crowd is getting involved and starting to notice a trend, and that's when the trend switches. This is kind of similar to that, where whales suddenly get more involved on a big swing in one direction, and then the price direction switches. So those were the three biggest spikes since the the then all-time high that occurred in mid-May for Ethereum. So very interesting to see that on whale transaction count. I'm glad you brought that one up, Max, because I hadn't looked at whale transaction count in quite a while. MVRV looking pretty flat on the 30-day end, just like Bitcoin, so not much to say there. Social dominance will remove social volume, even though, interestingly, huge clusters of social volume here in December and January, and then it's sort of died down just recently. But let's take a look at just dominance. I'll put it on a moving average. And this is, of course, a very long-term moving average because we're looking at the last 5 years of data. We did see that the least chatter was happening in the beginning of 2020 and peaked in January 2021. And it's mostly treaded water just in the past year or so, with a slight uptick recently. So slightly good sign for Ethereum. We'd love to see it way back up here in October 2018 levels when prices were kind of starting to bottom out. But for now, not much to say on the social dominance side. Funding rate, I won't dive too deep into it. It looks about the same as Bitcoin right now, mostly flat with a little bit of a shorting bias right now. Daily active addresses looking, I'm a little too zoomed out, so we'll look at just the past year. Looking like it's dropped down and it's continued to drop down since the all-time high levels, and overall slightly bearish sign here. Mean dollar invested age, just like Bitcoin, continuing to see a lot of dormant addresses, getting more and more dormant, not a lot of movement right now. Bearish sign right there. Weighted sentiment looks a little better than Bitcoin. Bitcoin, if you remember, was looking just above the normal resting average, so a little bit of a positive bias. Weighted sentiment has a slightly negative bias, so people are starting to doubt Ethereum's longevity and its ability to return to, $4,000 and above. And then whales. Whales are always interesting to look at for Ethereum because there's so many DeFi opportunities and DAOs and things like that that can kind of clutter the data. But generally, if there is two tiers that I look at, it's the very, very top tiers, except for 10 million. So I look at 100,000 all the way up to 10 million. And overall, obviously in the past year, things have looked pretty good and there's been a lot of accumulation. They were holding about 48.47 million Ethereum a year ago. They're up to 52.95 now. So obviously a nice uptick there. They saw a nice, at least a noticeable downswing to start the new year. But ever since about a week and a half ago, say, there's been a bit of an uptick again. Generally, this line does move up over time, and that the price tends to follow. So overall, a good sign here. I'm curious if you have any tiers that you like to take a special look at, Max, when it comes to Ethereum.
Yeah, with Ethereum it's difficult. I think as long as we haven't introduced now different staking contracts, so that we can remove them and focus on really personal holders. It will be always mixed bags. There are staking holders, and of course there is like Ethereum 2.0. I would like to see them all separately.
Yeah, it's something our developers are working on.
Exactly, yeah, exactly. Let's wait for this.
Yeah.
Bitcoin is different. It's different. It's easier.
Right.
Yeah.
But all things considered, based on the whale data that we do have now, it's a good sign, I'd say, especially since the last just 10 days or so, they're starting to finally, like I said, move up once again after this kind of slight downtick that we saw that corresponded with a downswing. So that's Ethereum, guys. I think we're 45 minutes past the hour now, so perfect timing to start jumping into some other assets and answering what questions we can.
Okay. On the top of the vote right now is Vulcan Forged. PYR is the ticker.
PYR, not a coin I have ever looked at.
Max, do you know this project?
I've seen the logo before, but I'm not aware what exactly it does. So no.
I wonder what the market cap is. If either of you know what the market cap rank is, I'd love to know. It's definitely not a top 100 asset, but either way, it looks like there is some data on it. It's an ERC20, which is great. So we'll see what we can find here. Super interesting on the whale transaction.
164 by CoinMarketCap.
Okay, so it's certainly not a mini market cap asset by any stretch. It is a top 200 asset. So it's had its share of major movement upwards. I can see why there's interest in it, considering it jumped all the way above $48 at the end of November. This has been, yeah, wow. So if we're looking at just September to end of November, about 2.5 months here, prices went up almost 1,500%. So there was probably some pretty cult hype behind it in terms of one of those altcoins that was just surging for a while. And it's interesting to see, looking at the whale transaction count, which is the amount of transactions above $100,000, there was this huge spike that occurred right at a mini local top here on December 23rd. And then prices have not recovered since. I see that most of the whale activity tended to cluster between the very beginning of November all the way until mid-January, and it's starting to die down again. Until we would see like a major uptick again and more transactions that are of the really large variety, I'd be a little concerned over PYR's ability to get back to these huge price landmarks.
Can we see age consumed and distribution through Mean Age, mean dollar investation? I want to see if a distribution took place.
Sure. We saw spikes pretty much at those same spikes that occurred for whale transaction count, and not much is happening since that second week of January.
Okay.
And then mean dollar invested age, you said?
Yes.
So mean dollar invested age, interestingly, is looking flat. It's not moving up.
Maybe some back.
It's in the negative, which is interesting. I've never seen this before, Max. Do you have an explanation on why it would be negative?
No, this seems to be back. It cannot be negative.
Yeah, so this may just not be relevant data for now. I mean, it does appear that went, yeah, I think it's too buggy. There's not enough correlation for me to say that the direction is meaning anything. So we'll skip that for now.
Max, wasn't it the one token which recently was requested in our support, and they say that we about to process after they move to the new contract? I saw it was the date.
Well, I think that was RSR.
Okay.
So not this different. Okay, but it looks similar, so we can check it out.
And network growth, do we still have some new block?
Yeah, we should have that. Let's check out network growth. So this is the amount of new addresses that are being created on any given day. So
sorry, Shisha is just saying in chat that he's confirming that there was a hack for PYR and they got a new token. So it's exactly the same case as RSR, and we need to include the new token contract.
Okay.
Interesting. So we're looking at the pre-hacked data essentially for this coin, if I'm understanding correctly. Or at least only one kind of the data for the coin that existed prior to the hack. So we might be a little limited in what we can show because of the fact that we're not also including the new coin's data. But regardless, we see that the amount of new addresses made for PYR is understandably very low because mostly the new coin is what is producing the new addresses now. What is the new coin called? What's the ticker, just to see?
Oh, I'd assume they keep the same ticker, but just have a new contract.
Yeah.
Okay, got it. So we don't have the new contract data for PYR yet. We only have the old contract data. Okay. Well, then we'll limit how much.
Sorry.
Yep. Go ahead. Yeah, we'll limit how much we show for PYR and just take the next coin. So thank you for whoever suggested that, and it brought to our attention the fact that we need to add new contract data for it.
Mm-hmm.
And actually, Brian, this brings me to the thought that starting from the next week, we wanted to change a little bit, that we publish a poll Wednesday to Thursday, or we discuss a little bit, and then you raise your favorite tokens which you want to be analyzed, so as we have time a little bit. So we don't have cases like this. Someone token is raised, it wasn't on our radar, and then we find out, okay, the data has to be generated.
Yeah. So
and it's actually a long-term goal is that we connect it also eventually with our token, and you can raise by staking and channeling some token which analysis you want to have. But the first few iterations will do it very simple, just on our Twitter, and we can prepare a little bit more in advance.
Yep, exactly. So you'll see a Twitter pull up beginning on Wednesday next week, where you can vote on in the comments of the question we propose, which asset you'd like us to have some increased conversation about. So it doesn't have to be in real time, and we can kind of have a day or two in advance to look through some very interesting coin metrics for the ones you suggested. But for now, what's the next one in line, Balresh?
The next one in line would be Strong. Name the same as the ticker.
Got it. Okay, Strong. So this is another ERC20 asset, which is great. And Strong is apparently matching its name right now. It's looking quite good. The amount of new addresses created over the past, pretty much since late December, has looked quite good. We saw a peak here right before the all-time high of about call it $1,200 or so. And after that, it kind of started to tread water a bit. But after right about Christmas, there were a ton of new addresses created once again, and it stayed pretty high ever since. I like to see this divergence where price is moving down, but network activity is kind of looking up ever since. That's a sign that when a bull run begins, Strong may be one of those assets that comes out ahead of the pack. So good sign on network growth. As far as social dominance, it does appear that it's getting more attention over time. Over the past year, it went from being discussed, call it 1.3% of the time, to currently around 1.9% of the time. It was up to about 2.2% in late January. So it does appear to be getting some increased attention right now. I want to check just how old this coin is. So it started publicly trading around mid-2020. And yeah, it does appear that it started to get increased attention even after the all-time high, which is a pretty nice sign. Funding rate, no data on that. Daily active addresses looks fantastic. Yeah, this is a very interesting coin, guys. Strong has increased its active addresses pretty much since mid-May after the altcoin and full market crash that occurred around this time. And it's just gone up more and more ever since. It's surpassed 5,000 at one point. It even surpassed 6,000, I saw. And it's currently sitting at about 4,500 active addresses per day based on the smooth moving average. It does appear that the trend of just absolutely surging has stopped, at least for now. Over the past week, it's kind of stayed flat, but it certainly isn't dropping back down much either. This is, of course, an incomplete day here, so don't put too much mind into that one. But overall, daily active addresses is looking pretty much as good as any coin I've ever seen. Curious on your take on this, Max, either Max, if you have some added insight on Strong and why there continues to be a buildup of more and more active addresses over time.
Yeah. So here's a very similar, even though with different context story as the previous token. I'm reading now online about what they're doing. They're doing interesting things. I'm not sure if this network activity connected. It's a node as a service. It used to be. Now I think they are doing the next iteration, and I'm definitely would like to spend more time in advance, at least 1 or 2 hours, to understand more what they're doing, so that the network activity can be understood through the fundamental values they're bringing or they're interacting with on-chain. And it takes time. Yeah? For taken purely from, as we know, this network growth and directive addresses, it looks very good. What we can check also transaction volume, just to see how much of tokens are transacted. Not that it's network growth and doing simple things, but there is no real accumulation.
There's trading volume and there is transaction volume on top of it.
So yeah, let's see transaction volume. Yeah, quite good. And maybe let's say circulation 7 days. I like lately to see 7 day circulation. It's a kind of remove a little bit noise. So yeah, growing. Okay, well, this is good. This is good. Network growth is active. People willing to pay Ethereum fees, if even they're lower now, still they're quite some fees. So the moment the market turns around, I would expect Strong to be strong.
Yeah.
It's just pressed by it's pressed by the rest of the market. It's like generally we are suppressed. Nothing can go well except sometimes Shibu or Crypto.com, because of the advertisement, they can pump a little bit. But when the market is in the bear mode, nothing survives. But based on this metrics we're seeing now, it's good. It's good. Just need to be a bit patient and see when market decided it's enough from dumping.
Right. There are definitely some interesting things going on with its price because, for example, in mid-May, there was a drop-off amongst many altcoins, but it wasn't quite as strong for, pun intended or not intended, wasn't quite as much of a dip for Strong as there was for many other altcoins. And then here, it peaked in late October despite Bitcoin peaking around here on November 10th. And many other altcoins had their peak right when Bitcoin's did, of course. So Strong it kind of looks like it has a mind of its own a little bit and is acting very independently from the rest of the markets, at least relatively to other altcoins out there. So I'm curious if I plot just Bitcoin's price against it, how it would look. And like I said, so Bitcoin hit its peak back on November 10th, which is where many other altcoins did. Strong was already pulling back at this point. It did have a minor uptick on Bitcoin's all-time high day. But like I said, this is interesting looking at Bitcoin's price, like I said, in the second week of May, dropping off a cliff. Strong didn't drop nearly as much from a relative perspective. And then it was already starting to move up as the rest of the markets were moving down. That's quite interesting. I haven't really looked at Strong in much detail other than a handful of times in the past. But based on what I'm seeing here, it's got some serious weight behind its own price movements that are pretty independent from the rest of the sector. Let me also check just its price versus BTC. Strong price BTC. Remove that. Yeah, so notice the pretty drastic differences in its price versus Bitcoin versus just its price in USD. Like right here, especially, like going so much higher in July. And it clearly is showing that it has a bullish bias versus Bitcoin over at least the last year. So yeah, really good signs across the board so far. I'm quite fascinated by some of the metrics we've looked at, and we'll try to cap it off with a little bit of whale activity just to see if there might be some alpha here. So price is sitting at $350. If we looked at the whales holding between 100,000 to maybe 10 million-ish, if I could find it, there we go. So that would be 1,000 to 100,000-ish. Get rid of that. There we go. So it does appear that this is the tier to keep an eye on. They really started taking profit, I guess, as early as August, but they had an uptick. So we can say early October is when they started to take profit. And then the all-time high occurred at the end of the month. And they went very far down as price was following. Then they started accumulating about 2 weeks before the price started to react to it. And right here is where it gets very interesting. Huge accumulation there. Huge price downswing right there. So Max, from what I'm seeing, there's a massive accumulation going on right now of these particular addresses. They were holding 2.16% a month ago, and they're holding 2.36% now, which may not sound like a lot, but 0.2% of the supply, when it's only held, there's only about 2.5% of the supply held by this already. That's around a 10%-ish increase in how much they're holding, which is why it's showing a one-year high. So from what I'm seeing, this is a pretty good sign for at least this small tier of whales.
Yep.
Let me see if there's anything above the 100 to 100,000. Let's see what the 100,000 a million look like. So that, yeah, it looks like there isn't a ton of movement. You can tell by the really flat lines. So this has to be a lot of exchange addresses. We'll look at the tier below it, 10 to 100. Wow. Okay, so the pink line here shows a massive accumulation that really started at the all-time high in late October, and they haven't slowed down a bit.
Yeah, small. Well, this is only maybe a not so good sign. I would rather see smaller holders to be reluctant, but it's only the only one among all other positive signs.
Yeah, but these aren't they aren't necessarily small addresses. These are you know, with the price at 300-ish or 400-ish.
Yeah, you're right. It's not so super small. Yeah.
We're still talking about $4,000 to $40,000. So it's not nothing, but they're definitely more sharks than they are whales. So the red line, I think, is what is most important to look at. Granted, it's a very small percentage of the supply that they hold. So this still looks like kind of a centralized coin where, yeah, so 1 million to 10 million, they hold about 95% of the overall supply. That being said, it looks like they almost never move, which is very interesting. So they're not even distributing to smaller assets. I wonder if they're like, I wonder if there's a constant print of more strong to counteract, you know, when smaller addresses are getting involved, but it's hard to say. I don't know if it's an XRP type of situation. Someone who may know more about strong, we'd love to hear your insight on you know, how the top end addresses function and how they tend to circulate more and more coins into the overall supply. But very interesting. It does look like there's a huge uptick in that tier that appears to be most controlling of where prices go next. All right, time for maybe one more asset, maybe even two, if we can really squeeze in some quick analysis, Balresh.
We actually don't have a clear third place. Pick anything.
Pick the ERC20 if there's one that's in the ERC20 and one isn't.
We can also do summary for the market. It's already like short left to 5, but to keep people too long.
Oh, what might be interesting right now is looks rare. I guess
sure.
Curve is always interesting.
Yeah, let's see if we can do a very quick cliff note analysis of both of them. So network growth, super interesting, went above 56,000 on January 11th and has ticked down ever since to only a few hundred. So not a lot of new addresses being created for looks right now. Social dominance, it has seen a nice uptick. It got to around 3% at peak and has dipped down just a little bit since. I'm on a pretty long-term time scale though. I know that this is only a few month old coin. It didn't even start really publicly trading until the new year. So I'll just go to last month, make it nice and simple. So yeah, social dominance, not much of a change. Price BTC, let me switch that. I think we were looking at daily active addresses there. Daily active addresses, not really moving much in the right direction. It started off with a bang about a month ago, but is down to anywhere from 2,000 to 4,000 now, after being up as high as 12.5K back on January 20th. Mean dollar invested age, not a lot of dormant tokens moving. It's not much to really say though for a coin that's only been around a month. Weighted sentiment, slightly bearish. That can be considered a good thing. We can see that the most bearish they got was on the 31st, and there was a nice big healthy upswing right after that day. Let's see if we can get any whale analysis for a coin that is so new to the markets. Let's get rid of that. Let's take a look at the 100,000 to 10 million coin holders. Okay, interesting. So they definitely distributed and dumped some of their coins beginning on the 21st as prices were moving down, even as prices began to rebound, like a lot of altcoins did at the turn of the month. There was a continued distribution of these big whale tokens held. And ever since, there's been a nice uptick. We especially saw a nice uptick on Valentine's Day, the 14th, before dumping right back. It does appear that it's starting to move up again overall. Keep in mind that with such a new token, though, it's really tough to predict how much of an impact these whale addresses have on the markets right now. We may even want to include the very, very top ones because the coin is such a fresh entry to the markets right now. So if we look at let's look at anything above 10,000 and include like 10 million and above, which of course includes exchange addresses. This includes 98.6% of the supply. How about we look at just a million and above? Get rid of that. So 1 million and above, we're still looking at 97% of the supply held right now. And they have started to distribute beginning on the 3rd. Prices have moved down ever since. It does appear these huge addresses have some alpha because they started accumulating on the 21st. Prices moved up and then they peaked right here on the 3rd, and prices have moved down ever since. So overall, not a big dump by any stretch by these huge addresses of $3 million held or more right now. Or I should say $1.6 million or more. That's where the price is now. But stay tuned. I'd keep a close eye on the 1 million and more, especially with the coin being so fresh. This is probably an important one to look at and see whether they continue distributing to smaller addresses as the coin grows, or whether the huge Lux whales continue to retain a massive percentage of the supply. All right, and last coin you mentioned was Curve, right, Balresh?
Yes. Curve
All
and
right.
also tied with Crow.
Okay, we'll round out with just Curve, and we'll look at Crow next week if you guys vote on that on our poll on Wednesday. So network growth, it looks like, let's zoom back out again to the last year. Looks like it's mostly been a tick down ever since the first week of December. It doesn't seem to have a ton of correlation to price. It certainly did a year ago, but there wasn't like a huge upswing at the turn of the year when prices hit an all-time high above 640. There wasn't a huge network growth uptick, a little bit, but nothing significant, probably because a lot of assets were seeing a lot of volatility and there was not enough attention being given to Curve. But right now, around 200, a little over 200 new addresses being created every day for Curve. Nothing special going on there. On the MVRV side of things, it looks like it's actually getting close to an opportunity zone, like a lot of the altcoins were looking like when we touched on that earlier in the call. So opportunity zone would be right at that line. We can see that it really went below that on the 24th, and that was a very clear sign that it was a price bottom. Same back here in late May, got way below it, price bottom occurred. It looks like on the top end, if we go right there, yeah, the price tops have also been predicted pretty well anytime it goes above. So MVRV is a very good metric to look at for Curve, it looks like. And, you know, even recently when it went below negative 15% at the beginning of this week, or actually it looks like last weekend, that's when prices bounced and then it got back up to neutral, prices dropped back down, and now it's getting close to that opportunity zone again. So keep a close eye on that for sure. Social dominance, not much to say. It is not really being discussed much at all right now. Funding rate, slightly shorting right now on Binance. Same with FTX. It doesn't have BitMEX data, but it does have DYDX, which looks pretty neutral right now. So slight short bias on Curve, that's a good sign. Daily active addresses, kind of moving down, not really much to say there, just like network growth, pretty much right around 1,000 active addresses going on the Curve network every day. Mean dollar invested age, things are starting to look pretty dormant. You want to look for, you know, a big downswing like this, like we saw in late August, as a clear sign that prices can move up due to the amount of dormant circulation going on. Weighted sentiment, there does appear to be a nice negative bias like there is with a lot of altcoins right now that are kind of collecting dust a little and being ignored. So that's a slightly good sign. And then finally, Whales, let's take a look. The price is sitting around $2.90. So estimated, we would call Whales right around 100,000 to 10 million. And it does look like they are moving up. Let me get rid of this old trend line. Yeah, so over the past year, they have accumulated substantially. 6%.
Well, with Curve is special, yeah. Everyone wants to get as many Curve as possible, and there is a famous Curve wars. Well, fundamentally, Curve is like as strong as before. Curve Uniswap, it's like two. I would say, yeah, we can, as you discussed now, and you went into details. This is important details, and you show a few things how you can optimize your entry point. But as long as you believe in crypto, you should also believe in DeFi and Uniswap and Curve. These two unavoidable. It should be in your portfolio. Well, percentage, how much you dedicate is different. There are some nice setups where you could increase or decrease positions, but Curve is strong, and there are tons of whales and protocols fighting. Well, now not tons, few protocols fighting against each other. How they can dictate decisions, what is listed and used on Curve. And what I'm interested actually, can you take a smaller players, let's say 1,000-2,000, and see what are they doing?
100 to 1,000?
Yeah, and merge it with 1 to 10 and 10 to 100.
Got it. So 1 all the way up to 1,000.
It's just small hodlers, so they keep buying, yeah. And take a like longer time frame. Just moves on the bottom line. Okay, whatever you use.
Oh, I see what you're saying. Yep, we can do it that way.
Yeah, just want to see. So the only one-time panicking. Okay.
Yeah, pretty much a constant rise, other than that one anomaly in late 2020.
Okay. Yeah. So and new network growth as there are any new people coming.
No, we saw that it's mostly looking pretty flat
Yeah.
Other than like the end of the year where we saw a bit of an uptick, it's mostly just creeping back down right now.
Okay.
So not much special going on with Curve. It looks like it's kind of hanging on and waiting for the next bull rally, and that's where we'll start to see some evidence of some nice alpha there. All right, guys. Well, we got some really nice suggestions. I hope this was helpful. I definitely appreciate the suggestion on Strong. That was a really fun one to analyze and see many of the leading indicators going on there with the continued growth. But yeah, we hope this was helpful. Like we always say, feel free to follow up with some questions in our Sandbase Pro chat or our general chat, depending on if you're a Pro subscriber or not. Don't forget that our Pro subscriptions continue to be one of the most affordable offers out there in terms of memberships, especially for what you're getting. We probably offer the best, or we definitely offer the best bang for your buck out there at just $44 a month for a year subscription or $49 for individual months. So keep that in mind. Don't forget to share your referral links if you'd like to make some commission for spreading the word. You can create a referral link just by going into your account settings up here where your avatar is and going to generate referral link. And that's all you need to share with anyone on Twitter, Reddit, wherever else you may be. And until next week, guys, I hope you all have a safe weekend. Enjoy the volatility. Be careful out there. And we'll talk to you next week.
Yep. Don't worry much. As long as we don't have war, I think it's market just keep in mind that the big players, they have to do it. All institutional holders, they have to price in all the risks. And there is non-zero risk of the war. I still hope nothing will happen there. And it's just play of the powers. And as, of course, as they rebalance or reposition themselves, it moves market a lot. And crypto is moving, as Brian, you showed in the beginning, the first one. It's very easy, volatile, and it's full of opportunities. I still believe we should find the bottom somewhere soon. And maybe we'll have some terrible news like almost war happened, something like this. Then maybe we'll recover.
And the Fed rates too. That's also something to remember. With March a couple of weeks around the corner, there might be some volatility there too. So
there will be, but this will cover probably next week.
Yeah, absolutely. All right, guys. Thank you so much. Appreciate your contributions, Max and Balaresh, and we'll talk to you all soon.
Talk to you soon. Bye-bye.